Hi, good morning, and welcome to the Money World. My name is Amit, and this is my first video on this channel. I'll give you some background about myself. I'm a chartered accountant, and I have been working in IT consulting and software industry for around 20 years. I have also been investing in the stock market since the 1990s. Since I come from a finance background, I have a lot of interest in investment and other products to make money. Not that it always works. Sometimes you make money, sometimes you lose it as well. So, through this channel, I want to share with you my experiences in various investment products that are around, and I will be sharing a lot of different videos on different types of topics. So, to start with, we are now in the middle of the corona pandemic, which has hit us really hard. And you can see that most of the businesses are now closed, and many of us are working from home. A lot of people are have lost their jobs, so economic activity has come to a standstill, and this is reflected in the stock market as well. So if we compare with the levels of January, the stock market now is a lot down, almost 30% down. And this creates various opportunities for us to enter into the stock market. So in the next slide, I'm going to show you uh, how much movement has happened in the stock market. This slide is courtesy of my friend Nitin Singhvi. So let us compare what is happening now in 2020 with what happened in 2008 after the subprime mortgage crisis hit the US markets, and the repercussions were felt all over the world. So in this chart, shared by my friend Nitin, this you can see that from a peak level of 6357, the index dropped 30% in just a few trading days, like 10 trading days. And although it recovered slightly from that low level, it fell further, and in a few months, the lowest level hit was 2252, which was 65% of the peak. So it's this index is just one third of what approximately one third of what was the peak. So imagine a person who invested at this level, uh, what amount of money he would be sitting on right now, because not only this index recovered completely, now it reached a high of 12,430 in January. We all know that. And after the crisis hit, the corona crisis, it has already fallen 31%. Then the first bounce came, and it recovered. After that, it has fallen 40% from the peak of 12,430. And right now it's a little higher than this level. So can we expect lower levels to be reached, like 60% or 50% or 40% of the uh, uh, peak of 12,430? So this all depends on how long this crisis is going to go, and how fast we are able to resume normalcy. But that's a question we cannot really answer at this stage, because we don't have any vaccine. The remedies are not clearly out there. So it may be a few months, or several months till we get back to that. So we should be looking out at this stage, looking at the market, and trying to figure out if we have reached the bottom, or nobody can perfectly buy at the lowest level and sell at the highest level. I mean, not a common investor like you and me. So I think the effort should be to uh, try to research and find out uh, how we can invest at lower levels. So in the next few slides, what I'm going to show is, for those who have not yet entered into the stock market, or have not in the stock market in a substantial way, how can you enter the stock market, and what percentage of income can you allocate to such investments. But we should keep in mind that a stock market investment has a high risk profile. So the risk is high, the return possible returns are high, and for a long-term value investor, uh, you should look at from a 5 to 10 years perspective. So whatever you invest now may not be really available 5 years or 10 years down the line. So you can actually reap the benefits of that only 5 or 10 years later. So what are the objectives of investment for a common person? As I see, there are three objectives. The first one is liquidity, that I should have my money, I should have access to a substantial portion of my money as and when I need it. The second one is, of course, safety and security. That is, whatever money I invest should be in safe modes, should not go bad. I should be able to recover at least the capital, if not the interest, or if not a high rate of interest. So whenever I need it. And the third thing is returns. So I should have good returns, and I should always explore the possibility of high returns. Of course, high returns come with a trade-off of high risk, which we'll see in the subsequent slides. So this is, a typical mix of investment that a person has. So cash, fixed deposit, safe investments like NSC, etc. Then retirement funds like PPF. Then a substantial investment in India goes in your own house, and of course, then whatever remains are, uh, a small portion of it can be allocated to shares. So this is the red portion. And in the next section, I'll talk in detail about how much you can allocate to each of these type of investments, and what are the advantages and drawbacks of each of them. So for those who want to invest in shares, now is the time probably. Investment in shares or similar products like equity-based mutual funds uh, are always high risk, and there is a possibility of high reward. There is always a possibility of losing all your money. That is why people are uh, very skeptical about investing in shares. So I would say that investment in shares should always be with a long-term perspective, unless you are a trader or you are very much familiar with the day-to-day trading. Uh, uh, the common investor, I think, should not invest in like short-term or day trading. So invest with a long-term time frame of 5 to 10 years. Uh, don't invest based on tips, because tips just don't work. So it's kind of necessary that we do some basic research on the topic based on your liking and knowledge and background. But some kind of general research is always helpful and always necessary. So we'll talk in subsequent videos about two types of research. One is the fundamental analysis, and the other one is technical analysis. So fundamental analysis deals with the analysis of financial statements of companies, like balance sheet, profitability statements, then economic indicators, sectoral analysis. So things that do with the fundamental factors that affect the company. And the second one is the technical analysis. So this deals with analysis of trends or charts of share prices, and there are several statistical indicators that deep dive into these trends. So this is more to do with the pattern of movement of share prices, and the conclusions you can draw from it. So this is, I would say, more to do with the timing of uh, ups and downs in the stock market, rather than the fundamental worth of a share, which is driven by fundamental analysis, or which is shown by fundamental analysis. So in the previous slides, we saw the characteristics of liquidity, safety, and returns. And let us look at the different investment types and how they compare based on these three parameters. So the first one is cash, which we need for our day-to-day transactions, and you should at least have 2 months of cash with you to just do your routine shopping and all the transactions that you require on a daily basis. So the good thing here is that nowadays new banks like IDFC, etc., have come up with saving accounts that offer very competitive rates of interest, very rates of interest that are almost similar to fixed deposits. So you could keep in those banks and withdraw by ATM or new products like Paytm whenever required. The next level is bank fixed deposits, which I would say keeping around 6 months of your expenses in these kind of products. So whenever there is a emergency, like a medical emergency or payment of, let's say, annual school fees, something like that, you can bank upon these fixed deposits. These are safe nowadays. The government agencies offer insurance up to 5 lakhs in one bank. So depending on how much you want to save, you could have a couple of different banks, relationship with different banks, and then invest up to 5 lakhs in these kind of products, and they would be totally safe and offer a decent amount of return. Then a slightly better than that is products like NSC or post office schemes, which offer rates up to currently 7.9%. But here the liquidity is less. That generally in NSC you cannot withdraw unless except for specified causes. So generally the 5 year lock-in is there. Or if you invest for a tax saving scheme, there is another, no, there is a 3 year lock-in usually. So these things need to be kept in mind. Plus the tax implications of investing in NSC, PPF. Of course, with the recent budget, a lot of tax benefits are going off, but still we have option to opt for either to the old way or the new way. So if you have a high amount of investment and a housing loan, you could opt for the old way at least for a few years. Then going to retirement products like PPFs. So based on your age and the planned retirement corpus that you want to have, it's a good idea to start putting some money in PPFs because there are tax advantages as well. Plus, nowadays nobody has any pension or any kind other kind of you have your company PPF, company provident fund, but this can help you during retirement. Of course, just like similar to NSC, in PPF also you cannot generally withdraw uh, during the first 15 years. And if you want to withdraw, there are certain conditions and limits of doing that. The next one is probably one of the most important ones, especially for a younger family. So, if you buy a house, which is usually a good idea because it becomes a lifelong asset, and buying an own house, so the first house is always a good idea because then you don't have to pay rent year after year. So paying for a housing loan also offers tax benefits. So I think it's a good way of investing your surplus that you buy a house. Of course, the old days are gone when you could get huge capital gains out of housing sector. So buying a second house no longer makes that much sense. So, but the first house, I would definitely, I think for me, it gives a sense of security, and therefore, I would definitely go for the first house. Then life insurance is probably one of the most confusing products. At least I have never understood those products fully. So life insurance protects you against loss of income if you suffer any unfortunate event that results in a permanent disability, and it provides for your family in case of uh, death of the insured. But other than that, if you are financially well off, I would say these products should not be seen as saving products. So these are the returns here are much lower in my experience than other products that we saw. So life insurance should not be seen as a saving product. Life insurance only if you want to protect, if you have a huge housing loan, or if you want to protect your family against any unfortunate incident that may happen to you. So look at term insurance as well, because nowadays, just like a car, you can pay a flat amount and get a huge term insurance of, let's say, 1 crore rupees. So if you are having a housing loan, you could, during the tenure of the loan, you could keep that term insurance and pay a flat premium of a few thousand. Depends on, again, on your age, and yeah. So then gold has more of a sentimental value attached in Indian homes, rather than an investment value, because gold is required to be given off in marriages. So if you need that kind of investment to be made because you want to give off gold in child's marriage or something like that, then I think that's a good investment. But other than that, it's like a dead investment. You cannot make it work for you, and it no longer appreciates the way it used to appreciate in the past. So I think recently it went up quite well, but for several years it has been languishing around 32, 33,000. So uh, another way to keep gold is, if you don't want to have a locker, a physical locker, and or you don't want to keep it at home, you can buy gold ETFs. So gold ETFs is the equivalent of gold, but it's in your demat account. So that's an easy way of keeping and managing that gold. So after most of these investments are something which you cannot do without. So you need to have those because they have some specific purpose. But stocks and mutual funds are more discretionary. But once you have satisfied all these needs, it's a good opportunity to earn higher rates of uh, return, because nowadays, with inflation being so high, sometimes we notice that inflation is actually higher than the rate of interest offered by many products. So your real income is actually going down, or your capital is actually getting eaten up, because the return just cannot keep up with the inflation. So in that case, you can certainly think about investing 10, 20% of your total savings on investment in stocks and mutual funds. So mutual funds, equity-based mutual funds are, for a beginner, it is a safer way of investing, because someone else does the investment on your behalf. So you give a fixed sum of money to the mutual fund, and the mutual fund managers will manage the investment. But with a little bit, but the problem here is that the kind of basket of stocks they put into, not all of them give very good returns. So you might actually end up losing on the returns if your mutual fund doesn't perform well. So in that case, with a little bit of background and knowledge about investing, you could go in stock market. It is a lot of fun as well to do some research in on companies, and then invest, and then see your returns, and then see your investment growing. I have seen a lot of time it happens the other way also, where your returns just vanish, or your investment vanish. Yeah, but that is part of the game. And yeah, I think in subsequent videos, I would like to share more about this aspect of the investing, and what are the different aspects of investing in stock market, like fundamental analysis, technical analysis, then basic things like demat account. Then nowadays there are new products like small cases, very interesting products. So I would like to I would share more videos on that in the coming days. So hope you enjoyed this basic video on investment, and please let me know your feedback on this channel. And my email ID is also mentioned. So if you have any questions, I'll be happy to answer those also. So thank you and have a nice day.